Welcome back to Macro Shock, folks. Today, we're tackling a headline that sent shivers down my spine because it comes from a man who's been right when everyone else was wrong again and again. I'm talking about Michael Burry, the legendary investor from The Big Short, and he's not just ringing an alarm bell, he's calling out the AI boom as a full-blown mirage. Is the AI money machine truly a flywheel of innovation or a meticulously crafted illusion of value ripe for collapse? On November 19th and 20th, 2025, Michael Burry, famously dubbed Cassandra by Warren Buffett, unleashed a series of scathing tweets. Under his handle @MichaelJ.Burry, Burry meticulously dissected what he calls the AI money machine, explicitly labeling the interconnected web of Nvidia, OpenAI, and their surrounding ecosystem as a picture of fraud, not a flywheel. His core argument, supported by a Bloomberg diagram, detailed Nvidia financials, and a pointed query about OpenAI's auditor, centers on three critical issues: suspicious revenue recognition practices, massive stock-based compensation (SBC) dilution at Nvidia, and a concerning lack of transparency and auditing at OpenAI. Burry argues that this isn't genuine demand driving growth, but rather a closed loop of circular financing where almost all customers funded by their dealers. He points to hyperscalers like Microsoft and Oracle pouring capital into OpenAI, which then buys Nvidia hardware, inflating Nvidia's revenue and valuation. He even highlighted Nvidia's $112.5 billion in stock buybacks over 7 years, barely offsetting SBC dilution, questioning the true owner's earnings. And most critically, Burry challenged anyone to name OpenAI's auditor, suggesting a significant transparency issue at the alleged linchpin of this $500 billion valuation. This isn't just another analyst call, guys. This is Michael Burry, and when he speaks, smart money listens. We've got to break down what this means for your portfolio. To get a pulse on where the market thinks this is going, I hit up Polymarket. While there isn't a direct AI bubble burst market with live odds, we can infer sentiment from related active markets. Specifically on Polymarket, the market for what will Nvidia hit in November 2025 shows a high probability, around 92%, that Nvidia stock will not hit $224 by the end of this month. This tells us there's significant skepticism about further immediate aggressive upside, even if the fraud claims haven't been fully priced in. Now, let's synthesize this with our SPY technicals and define three scenarios. A. Base case, gradual AI reevaluation, 65% probability. Scenario: this is our most likely path. Burry's warnings, while not leading to an immediate collapse, begin to foster increased scrutiny. The market, already showing caution on Nvidia's aggressive price targets, starts to gradually reevaluate AI valuations. The AI money machine continues to operate, but at a slower, more transparent pace as investors demand clearer financials and organic demand. We'd likely see a cooling in the broader tech-heavy indices. The Nasdaq, which is heavily weighted with AI-related stocks, might see moderate corrections. The S&P 500 could experience a shallow pullback, but the overall uptrend could remain, albeit with increased volatility. Impact on specific market sectors. The technology and semiconductor sectors would feel the most direct impact. Growth stocks with high valuations and limited profitability would face significant headwinds. The cloud services sector, closely tied to AI infrastructure, might see a slowdown in spending growth. Impact on major stocks. Nvidia, NVDA, could see a continued sideways trend or a moderate correction, struggling to break higher as investors question the quality of its revenue streams and the true cost of SBC. OpenAI's stakeholders, e.g. Microsoft, Oracle. While diversified, these giants might see some pressure on their AI-related segments. Microsoft's investment in OpenAI could face questions, potentially dampening sentiment slightly, but its overall business remains robust. Oracle's cloud deals, if tied to the circular illusion, might come under the microscope. AMD. Could also face headwinds as the entire semiconductor and AI hardware ecosystem faces reevaluation, but potentially less severe than Nvidia if it's seen as having a more diversified business. B. Bull case, AI narrative resilience, 20% probability. Scenario: the market largely dismisses Burry's warnings as typical contrarian noise. Strong earnings continue from key players, and breakthroughs in AI innovation maintain investor enthusiasm. The narrative of transformative AI growth overrides concerns about financials and transparency, driving continued capital inflows. The S&P 500 and Nasdaq resume their uptrends, potentially breaking new highs. Broad market sentiment remains positive, especially for growth-oriented sectors. Impact on specific market sectors. Technology and semiconductors continue to lead the market. Software and cloud computing companies benefiting from AI adoption would thrive. Impact on major stocks. Nvidia, NVDA, continues its impressive run, possibly breaking above previous resistance levels as demand for its GPUs remains strong and its financial practices are accepted as standard for rapid growth companies. OpenAI stakeholders. Microsoft and Oracle see their AI investments pay off, boosting their cloud revenues and stock prices. AMD benefits from the overall positive sentiment in the semiconductor space, seeing increased demand for its AI chips. C. Bear case, sharp AI correction bubble burst, 15% probability. Scenario: Burry's claims gain significant traction, perhaps accelerated by regulatory action or a major player reporting weaker than expected real revenue. The fraud narrative gains widespread acceptance, leading to a loss of confidence in the AI sector's fundamentals. This would trigger a significant market-wide correction. The Nasdaq could enter a bear market, pulling the S&P 500 down with it. Investor panic and a flight to safety would be prominent. Impact on specific market sectors. Technology and semiconductor sectors would experience a severe downturn, potentially mirroring the dot-com bust in severity. Companies heavily reliant on venture capital or circular funding would struggle to survive. Impact on major stocks. Nvidia, NVDA, faces a dramatic collapse in valuation as its business model and revenue recognition come under intense scrutiny. OpenAI stakeholders. Microsoft and Oracle would see substantial write-downs on their AI investments and experience significant pressure on their stock prices due to their exposure to the unraveling AI narrative. AMD also suffers a sharp decline, dragged down by the broader semiconductor and AI market crash. Given the weight of Burry's warnings and the indirect caution we see in the polymarket data, coupled with our SPY technicals, I'm leaning towards a watch-and-wait approach with a defensive bias. While SPY is still in an uptrend despite a recent pullback, Burry's message introduces a systemic risk that can't be ignored. I'm closely watching those crucial support levels for SPY at 661 and 652. If we break below those, it could signal a more significant shift in market sentiment. To resume a strong uptrend, SPY needs to maintain above 673. That's our key level, folks. A failure to hold 673, especially on the back of any further news validating Burry's concerns, would be a major red flag. Right now, I'm actively assessing my tech exposure, particularly in the most highly valued AI plays. This isn't a time for reckless abandon. It's a time for prudence, for reevaluating your positions, and for ensuring your portfolio can weather a potential shift in the AI narrative. I'm rotating some capital into more defensive sectors and increasing my cash position, ready to deploy if a clearer opportunity or a sharper correction presents itself. What do you think? Is Burry right? Is the AI boom a mirage, or is he missing the bigger picture? Let me know your thoughts in the comments below. And if you're getting value from these deep dives, do me a favor. Hit that subscribe button, smash the like, and ring the notification bell so you don't miss our next macro shock. Remember, this is not financial advice, just my analysis. Always do your own research and consult with a qualified financial advisor before making any investment decisions.